Afgri reported a 30% fall in full-year earnings as domestic farmers planted less maize than expected. This decreased demand for some of its products, including inputs such as seed and fertilizer, but also storage and silo services. Group headline earnings per share for the year to end June totaled 54.7 cents, compared with 78.6 cents a year earlier. The company declared a final dividend of 3.2 cents.
Afgri's got a market cap of 2.3 billion, price earnings 10.1, dividend yield 4.5, but that dividend yield is really from the earlier part of the year. The second part, they really didn't come through. Jason, let's start with you. Tough being a farmer. I mean, let's face it, you got rain, you got droughts, you got locusts and all that sort of stuff. And these numbers really, in a strong sense, showing just that toughness from it. They had farmers planting less, that hurt them. We can see it coming through in their numbers, we see it in their dividend.
Yeah, listen, the dividend was very disappointing, just over 3 cents. So, yeah, I think going forward, I think we've got to look at, you know, where's Afgri going? And they're trying to increase putting a lot of money into the food side of their business. They're buying chicken farms at the moment. So, you know, I like the sector. Maize prices, you know, have doubled nearly, they're up 100%. I think going forward, I think it's quite exciting what they're trying to do in the market going forward. So, yeah, just a disappointing set of numbers generally.
Well, I'm just surprised that they don't have a line item in their balance sheet called weather derivatives, or something that they can use to hedge against all of these weather variations and all the anomalies. I mean, we've had drought in Australia, we've had poor rainfall. Why don't they try to do something to, I mean, is it even possible for them to do something around that? Perhaps the climate change factors is something that's affecting them in a way that they cannot really ascertain.
Yeah, listen, you're dealing with the elements here. You know, we don't know what going forward, is it going to rain more? Are we going to have more droughts? So it's a very fickle market, and once you're dealing with the elements, it's you know, it's very tricky to determine how, you know, and where the maize price is going to go, and you know, agricultural goods and services. Is there going to be a demand, and how much demand is there going to be? I think that's what you've got to focus on going forward.
Paolo, Jason mentioned chickens. They're going into the chicken space. I mean, chickens we do know a bit about. We've seen rainbow numbers. We've seen Astral. We know two things from chickens: imports flooding into the country with how strong a rand, and prices just under pressure, prices that they're getting at the retail outlet. Maybe in a longer term view, but in the next 1 to 3 years, you chat to this Chris Kitto at Astral, he's saying it's a tough space to be.
It's a tough space, but you look at results from Country Bird, for example, and they come out with a really strong set of results, and they're all experiencing the same problem. This company, Afgri, will slaughter about 1 million birds a week, if I'm not mistaken. So you can just see this is a high turnover type of business. I mean, it's volumes and low margins. I mean, that's the nature of the game. Unfortunately, you're getting this Brazilian side coming through of imports, which is affecting the prices. And of course, in this case, as with all the chicken producers, I was about to say manufacturers, the feed is going to affect them, because, you know, feed prices are going to go up. So they're going to maybe face a challenging time going forward. And I think you're right, over the next year or two, this is probably quite a tricky business to be in. South Africa as an entity, though, is also looking at anti-dumping and so forth, so that might assist them in that case. But no doubt it's tricky. On Afgri's case, of course, what might benefit them on the one side is maybe going to hurt them on the food side. So yeah, you might get maize prices increasing and so forth. It's going to help them on the one side of the business, and the food side might take a little bit of pressure.
Trying to take some of the cycles out of it, maybe.
Yeah, they're trying to smooth the cycle out. So, and both those businesses are more or less, in terms of profits generated, of equal size. And then, of course, much smaller is the financing side.
Jason, I want to come back to you. We were talking before we came on air. What are we looking for in this type of environment? We're looking for strong balance sheets. Excuse me.
Strong balance sheets.
And what we've got here, and they've got almost R1 billion on call loan and overdraft, up from 200 million. They've got cash on hand down to minus 700 million from a positive 250 million. A balance sheet that is markedly under pressure at the moment.
Yeah, anything that's got high debt to it at the moment is what the market doesn't want. You know, we want strong balance sheets, strong cash flows, debt to equity. They don't want debt. Guys are not looking for debt at the moment. So we're in a deleveraging phase in the market, just generally speaking. And that is a negative, again, with a company like Afgri.
Let's take a look at the outlook on commodities. The SA maize are currently trading at 3-year highs. What do you make of that?
Yeah, and they may well remain there for some time, actually. So I would suggest that going forward, the next set of results for Afgri might actually look quite a bit better. It's unlikely in this type of environment, and of course it can happen. Just about everything on the farming side that could have gone wrong went wrong in this situation. So it's on that side of the business, I presume things are actually going to improve, and the next set of results could be quite good, actually. But I do agree, the balance sheet, I think, needs a bit of attention. They've also had some issues, though. They've had a penalty to pay on the commission side. Yeah. They've had restructuring on the empowerment side. So this has caused also one-off events that won't occur next year. So next year might actually be a better set of numbers, although I don't think shoot the lights out kind of stuff. And
also, they got given a sugarcane farm instead of in lieu of bad debt. I mean, that's a hospital pass if ever I saw one. Also, they did, as you said, in relatively small sort of financial services and the like, loans to farmers and the like, and they're looking to sell that book to the land bank and then essentially manage it and take a fee. And that's actually not a book. That's a clever idea.
I think that's smart on their side, actually. I think they probably just need to consolidate what they're doing. They're probably a bit too spread out. And moving out of that side of the business, I think, is probably it's also going to help them out on their balance sheet side. So probably a smart move here.
It will lower their gearing.
Yeah.
Yeah.
So they've also been shutting down some stuff. They closed some loss-making, their trading division. They do John Deere market share in tractors at almost a third. They've got combined harvesters at 43%. I suppose it comes back to, again, if the farmers are finding it tough with late planting, with droughts and the like, Jason, those sort of areas are going to be impacted on it. And this was a bad year to be a farmer or in the industry.
Yeah, listen, farmers have good and bad years. They have boom times and bust times, and that's, as I said, once again, you're dealing with the elements. We don't know how much it's going to rain. We don't know how long we're going to have droughts for. So, and if everything works in their favour, Afgri, is a great company. But right now, where it is, it's had a tough time.
With food security being the top of people's minds, do you think that the expansion to Africa is something that will stand them in good stead? Jason?
I'm a little bit unsure on how to answer that, just generally, because I think they've got to get it right here first before they can move
for seeking
abroad.
To expand. And so do you think that it's a hot stock or not, Afgri?
Not.
Not hot. Tell us why.
I want to see their balance sheet just get firmed up a little bit, and then I'll look at it. I also want to see their dividend yield. The dividend was very disappointing. I want to see what kind of dividend they're going to pay going forward, and then I'll look at it. So I'd rather be, out of it now and look elsewhere.
So a better dividend and a stronger balance sheet will make it possibly make it a hot stock for you. But
Correct.
It's not hot for now.
Correct.
Over to you, Paolo. How do you feel about Afgri?
Yeah, my sentiment's pretty much the same. I don't think it's a hot stock. I would want to give it a bit of time as well. I think it probably needs to restructure the balance sheet a little bit more. And no doubt, I think next year is going to be a better set of numbers. But as I mentioned earlier, I don't think that strong that it's going to change my mindset just right now. These results did disappoint, and look, it reflects, of course, these type of companies in their valuations. When you look at these type of counters, they're always on P's of 5 or 6 or 7. They're never the 20 PE stocks. I mean, that's the cyclicality of the business. But for the moment, it wouldn't be hot for me.
Two not hots. Now, I bet with your anti-chicken stance and the move that they're going into the poultry operations, you're also thinking it's not a hot stock.
I think food's great. I think we all got to eat and everything like that. But I think farming is really, really tough. These guys are showing us just how tough. And I'm going to agree, and I know it's boring to everyone agree, but get their balance sheet strong again, get things working, and I think they should take a leaf out of you, and I think they should go and sell climate futures contracts to their farmers. But for now, I'm going to say, let's give them a year. I'm going to say, as things stand now, not hot.
Bad time to be a farmer. Looks like it's also a bad time to be a holder of the Afgri stock. 3 definitive not hots here in studio. Moving on to Metrofile now. Last week, they reported a 38% earnings rise on an increased demand for its services. Headline earnings per share increased by 38.2% to 18.1 cents a share for the 12 months to end June 2011, compared to 13.1 cents the year before. Revenue increased by 12.4% to 460.6 million rand. Metrofile declared a final dividend of 2.5 cents, bringing the full year maiden dividend to 4.5 cents.
Metrofile market cap 824 million, price earnings at 11.2. What we're seeing with them in the dividend yield, 2.2, it's a nice yield. It's a start. They're starting to get there. There's still some pressure on their balance sheet. We'll come to that. I suppose the sense they're not typically a company that had paid. They've had a troubled 15 years in the market.
Yeah, so I think it's a good set of results in my mind. I like the turnaround, and I think it's quite important that this company and the people that work in this company know what it means to be nearly closed down. So I think they're on the right track.
Makes them hungry.
Makes them hungry. And I think it makes them a little conservative. If you see the expansion strategy, it's actually quite conservative. And I think it's because of the history and where they come from. Remember, this is over-leveraged and or because of their holding company and so forth. But they go forward in a fairly conservative way. I also like the product that they sell in essence, document storage. This is really, from a legal perspective, with us in this industry to stay forever. And if we have to keep documents for 5 years, they're talking of 7 years, and so forth. So it's a very vital part of the industry we play in, at least the financial services. So they have a very valuable offering, I think. And across all the lines, you may say the gearing, but the gearing is moving in the right direction. The cash flow is in the right direction. So it allows them, as long as your cash flow is positive and growing in the right direction, it'll allow you to address that gearing element. So I think they're in the right track.
And you mentioned gearing down from 101 to 72%. 72 is still high, but right direction. And it tells me that next year they get it to 50, frees up a little more cash. Exactly. 25 frees up some more. That dividend yield is going to be ticking higher.
That cash flow to move from 100 to 70, it's meaningful, because you can go from 70 to 50 to 30, and then you're in a great story.
Well, Paolo, you spoke a lot about their conservative approach, but the other thing that I find quite conservative, even archaic, is the fact that they think that we can still be storing paper documents and have that physical storage. The move now is digital, surely.
Yeah, well, they also move into that space, but the reality is, to a large degree, people are still dealing in the paper world, and you can see their turnover growing. Their volumes are still growing in that space. It might be an electronic world. As I say, they do move in that space. They do electronic retrievals and all this kind of technology that they are engaging in. Their challenge longer term, and not over the 1 or 2 years, but will be how they move into these new technologies and so forth. It will be their challenge, of course.
Well, they've been awarded a tender by Stats SA to do the census for October 2011. That's going to be 225 meters of documents that are going to be scanned. Jason, this is a once-off event. How are they going to maintain the revenue flows when, the stats season is over?
Listen, we've got a lot of companies that need to store a lot of data. That's just generally. I mean, you can't run from it. It has to be done. So I think the demand will be there. I think what they're doing, they've done a good job. I like the fact that they're paying a maiden dividend. I think that's exciting for the share. Look, there's a long way to go, but there's demand for storing data, maiden dividend, earnings up. Yeah, I actually think it's quite an exciting space that they're in.
And surprisingly capital intensive, because you don't just, get a building somewhere and throw documents in it. You need to fireproof it, waterproof it, rainproof it. And that's, to Paolo's point, slowing their expansion. They're talking about Africa, but they're doing it very, very carefully. That gives them a bit of a nice barrier to entry, and also means that they can't just rush out and expand like crazy. They've kind of done some crazy stuff in the past, put some reins onto them as to how they're going to move forward, and keeps the competitors, if any, at bay.
Yeah, listen, there's also a lot of legislation around them, in terms of, where the legislation's going. I think, the legislation is in their favour, generally speaking, now that you have to keep documents for 7 years. And, yeah, just generally, I like the share.
Paolo, are they broadly going to track GDP? So you wanted to interject their point.
Yeah, the one thing that's important in terms of their selling is that they're nearly a household name.
Yeah, no, absolutely.
And if you're storing documentation, documents, the onus for the retrieval and the availability and the safekeeping of them still rests with the owner of those documents. So it is hugely critical that your partner on the storage side is not a small player, is a big player, is a secure player.
It's not me and you've got a garage in our backyard contacting a big bank.
Because they've got presence in their name, they've actually got an advantage in the marketplace.
Yeah, strong brand, very strong brand, trust brand, and
trust
this is the sort of stuff that Buffett talks about, that sort of thing. GDP, are they going to broadly track GDP to a degree? I mean, the New Company Act 7 instead of 5 years, that helps them. Stats SA is going to help them with the census, but it's going to kind of be a GDP play, notwithstanding the efficiencies they can bring.
The efficiencies they can bring, and then the expansion into Africa they can bring. Remember, from that perspective, Africa is just probably a little bit behind South Africa. But you know, this document storage requirement, this is going to be a story for the continent in time, and that's where they can go.
So they're quite a big player, very few rivals, with the exception, of course, of Simon and his stock in his garage.
Which no one will come and do business with me. But
Paolo, do you think it's a hot stock or not?
I do, actually, yeah.
Yeah?
I'm good with it, yeah.
Jason, how about you?
Definitely, I think it's hot stock.
Two hots. What about you, Mr. Brown?
you know, it's just one of those terribly boring shares. That probably has a good place in a portfolio. I'm going to say hot. I like the story. They've got it together. I see dividends going the right way. I see them get their balance sheet right. As Paolo says, good brand name, good trust there. I like the fact they're doing Africa carefully. I think Paolo makes a great point. The fact that they were wafer thin away from going bust, making them a lot more careful going forward. I'm going to give them a hot.
And they still remain a key stock for small cap enthusiasts too.
Yeah, no, absolutely.
Fantastic.
They're not going to shoot the lights out, but they're going to give you a nice little bit of constant growth. Good stock.